Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What we'd like to do is talk about the equity markets this morning. Big rally in the equity markets this morning. Equity markets are up about 1.6% across all the indexes. That's the Dow, NASDAQ, and the S&P 500. Let's take a step back. We're still in an uptrend here, going back to the February lows. In fact, it looks like we continue to make higher lows and higher highs. And we're going to see how this plays out this week. Now, last Thursday, following the Fed announcement on Wednesday, looks like we had a little bit of a climax sell-off. However, that high did stay higher than the May 19th high on the S&P and the NASDAQ. And we look like some climax selling. The put-to-call ratio spiked to 1.6, CBOE put-to-call ratio. So that's usually the kind of thing we see in the bottoming phase. Friday, we sold off a little bit, but we didn't undercut Thursday's low. So right now in the S&P, we're looking to see if it can take out its recent high, 2120, and make a new high. If it can stay above Thursday's low, which is about 2050. And of course, for this whole uptrend to stay up, we want to make sure it doesn't undercut the 2025, which was the May 19th low. Similarly on NASDAQ, we're looking to see if it can take out its recent high of 4980, stay above the 4778, which was Thursday's low, and also stay above the 4678, which again was the low set in May. So that tells us the market continues an uptrend. A lot of things going on in the market. We take a look at the macro view. Retail sales are at an all-time high. Transportation volumes are up, and housing's doing okay. So again, those aren't the things the recessions are made of. The market should do pretty well. We look at the NYSE advanced decline line. Got dinged a little bit last week, but generally still in a big uptrend. Now, if we look out at earnings going out to quarter 3 and quarter 4. So right now, analysts are expecting for third quarter earnings to increase 1.3%, revenues increase about 2.2%. For quarter 4, looking at earnings to increase 7.6%, revenues up 5%. So a lot positive going forward this market. Now we have the Fed out of the way. It looks like the Fed's going to be dovish, so hopefully the market will stop worrying about the Fed. I think they concentrate too much on the Fed. And this morning's rallies led by the idea that Britain will not leave the European Union, the so-called Brexit. But that's to be seen. We've got a few more days. Those polls may change. So we might get some volatility here just yet. And also, we know that managers are underinvested. We got the end of the quarter. So we might see a little bit of chasing. So this might drive the market higher. Now, one of the plays we're looking at, it's a little bit different. It's a REIT. It's called STOR Capital, STOR. The reason we like it is it's got a 3-year growth rate in earnings at about 101%, revenues at about 77%, and it pays a 4% dividend. Now, STOR has been kind of trading between 26, 24 since February, tried to make a new high in April through 27, corrected again back to that 25 area, and again this morning's trying to break through 27. Now, we talked about this previous weeks. Breakouts aren't exactly working, so no reason to chase them. But you could accumulate shares of STOR anywhere now between this 27 to 25 area. And, that's the market environment we're in. With a dovish Fed, REITs will tend to do pretty good. This is a very well-run REIT. A lot of institutional accumulation. Its recent up-down volume ratio is about 1.3, which shows, again, it's being accumulated by traders and institutions. So, in summary, watch the levels on the S&P and NASDAQ. That'll tell us the story. And we're going to do a little different play here, putting some money in a REIT until we get a better picture of which way the market really wants to go. And then we want to shift back more to the growth sector. So as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago.